Hi, my name is Simon. I am with Trade and Perform Coaching, and I'm doing the trade review for ES, which is the S&P 500 futures. I'm going to also touch on the NASDAQ for today. Today's date is August 28th, 2014. I want to cover a couple of points today. So first of all, I want to cover the decision-making process governing a gap down. And again, the purpose of these trade reviews is not for me to look like a wizard or be a know-all, end-all. My job as a coach is twofold. One is to encourage, direct, and criticize when someone's doing something right or wrong. And then my second point is to demonstrate how I have done it successfully and been able to make money on a consistent basis and hopefully transfer some of that skill set over to someone who's trying to figure out exactly what the heck they're trying to do in the process, because this is not an easy game. And the part about the game that makes this very difficult is while the rules stay stable, the environment constantly changes, right? And in the market, it's difficult to figure out because it's an alien environment to our brains to begin with, right? And secondly, many of us as traders are trying to get something out of the market that we want very badly, and that happens to be money. We all want money out of the market, right? And the problem with that is once you want something from the market, you're no longer observing passively, right? It's no longer looking at it and going, ooh, that's interesting. Now, right, you're demanding something, and therefore what happens is you start to shut out anything that does not affirm what you want to happen, right? Whether that is what you want to happen is to make $1 million or $10. As long as that isn't occurring, you're going to start to look for evidence that will support your idea, and you're going to start to reject evidence that is counter to that idea. And that is where the first step of where traders, particularly retail traders, start to make their trading errors. So let me see if I can't figure out where to start this process. Okay, so today, as a trader, usually I start off my charts on volume profiles. Okay, so there was a very important process that I pointed out this morning in my live market preview. And in that live market preview, I had pointed out that on gap downs, we had had a very tight consolidation pattern that was right here. See these three bars? Imagine this one isn't here. This is today's. And these three bars, and that we had gotten very tight, and that usually when we get tight like this, right, we're either about to break up or down. In this particular case, we just simply head faked and consolidated for a fourth day. Nothing really changed. We closed right back into the range. But that being said, how do you identify when this is about to, when we gap down and then we drive lower? And I'd given two examples of that this morning in the live market preview, and I want to go back to that. I said in this morning we could end up with either this type of price action, specifically with a gap down that essentially turned into a balanced day and went nowhere, right? We gapped down, had a small range, and nothing occurred. Or, right, we could have choice B, which is this, where we gap down, and let me tighten this up a little bit for y'all. Or where we gap down, and then we drive lower all day long. And then the trick is, on days like this where you drive, obviously everyone wants, or everyone would like, including me, to catch that direct move lower. It is very difficult to do so. So how do we work around that? Well, when I went through the trade setup, I said that I had two choices today, and I'm going to go through those two choices right now, and then we'll go see how those played out. Okay, so now we had the benefit of seeing how the chart worked. But this morning, before the open, this is what we were looking at. And we were opening roughly at 90 to 89. And I said, first of all, the first thing I was concerned with is an open drive lower. When we end up with strong trend days down, those generally begin with a gap down, which we already had, right? Secondly, followed by 3 hard bars down, okay? Usually the first 5-minute bar marks the high of the day, and generally in the recent market that we've had, This pattern has generally gone down and then counter traded back up and then pushed lower from there. Additionally, we were coming into an open gap. This area was marked as an open gap. I'm not going to go into all the details of open gaps, but they're important support and resistance areas. This was an open gap. Now, one of the requirements that I need for trading in my own trading, right, is I need a rotation. Generally, I want that rotation to exceed 6 points or more. Okay, now that is a safety valve mechanism for me. I don't always follow it, but it is a rule of thumb that I like to follow. Okay, when we opened basically, I believe, if I recall, 89, traded right down into 88, and then pushed up. And I said pre-market that this was the backside test. This zone right here was Wednesday's low, and I didn't pretty much. I said if we can get a backside test up into Wednesday's low, that I would take this and take a shot at a downside move, and that the way I would compensate. So the last time I got this set up, what happened was we came in, we tested the backside, then we actually came all the way up into gap fill, and then we pushed all the way down, and I had ended up getting stopped out last time. So I made an adjustment this time, and that adjustment was that I would cover a quarter to half on the first rotation down, but that my stop would actually be all the way up here, right, which I realize is an enormous stop. It's a 6-point stop, and normally I would not use a 6-point stop under any circumstance, but what I was essentially contemplating doing was trying to get a push down in a market that's had no shorting, right? So I wanted to accomplish two things. I had two ways of handling this. I could have just simply treated this as a zone with my normal 2-point stop, which is fine, worked beautifully, taken my 2-point rotation and been done with the trade, right? I could have taken my 2 points, left a scale, and moved my stop either to true break even or to net break even, right, which is fine. That still would have worked out just fine. Either you would have zeroed out on the trade or you would have taken half, stop break even. And then my last choice was I could have simply taken the 2 points. I had already determined that I wanted to try to take advantage of a push down to zones lower where I was prepared to buy. The reason why I was willing to do that is this. Going back to the volume profile chart, okay, I was aware before the market opened that if I ended up with a day like this, look at the size of the rotation here. This is 1950 all the way down to 1925. This is a 25-point move, okay? That is huge, okay? I don't know what y'all or how y'all trade, but if I see a setup where I have a potential of a 25-point move down, and I assure you, when this day came, all of these days were for the most part slow grinds up, just like we're experiencing right now. We broke from balance and we came down hard. So my choice was between risking that we had a day like this, okay, or risking actually, I guess, that we came all the way back as we did at the end of the day, right, or the opportunity to get this move, right? So if I'm going to make a choice, we were normally when we gap out of balance, as we did this morning, this was where the gap down was, this is where the balance was. I am going to, and we're at the top of a range, I'm going to at least give it a shot at taking the downside move. Yes, I realize that we did not move to the downside and we moved back up. That's great. If there's traders out there who can figure this out, that every time we gap down, that we're going to get an upside move, I can tell you the gross majority of the time on gap downs out of balance, taking the contra trade for a move back to the upside is a weak bet, even with the open gap that was sitting there. That is a weak bet. The open gap was the hurdle, and we simply just didn't pass muster. I couldn't get past that open gap. The other thing that I want to point out about that is in executing this trade this morning, and I hope I'm not going through too many details, but I want to make sure that everyone understands what was going through my mind. I opted not to take this long. Had the scenario been a little bit different and we had opened at 94 and traded down in here into this, I would have flipped that scenario. This would have been lacking a gap out of balance. We would have opened within yesterday's range, traded down to the open gap. I would have gladly taken this long for a push back to the upside. The gap down itself is what altered my decision-making process. Okay, so that being said, I waited patiently for rotation back into the zone. First move, 1993, took it short. we had a scaling opportunity at 2 points. I did this live in the live market preview, and people had every opportunity just to take this trade off. And then from there, we had to see whether we were going to go ahead and get that rotation back down and through, or if we were going to come back up and break. And what turned out, so let's go turn back and look around at what we actually ended up with, right? So in real time, we gapped down, came right to the top of the open gap, pushed up into Wednesday's low. Right after the econ data was released, I took my short, rotated down, I took a scale, and then my plan was to see if we could push lower. I knew that it could be summertime slow, so I was willing to sit through all of this. My stop was actually right up here, and I had multiple opportunities to close, actually as little as for 1 point stop. I ended up having a 3 point stop on less than half of a normal position size because I'd taken a scale, and actually even at that it turned out to be less than 3 points because I had scaled. I had scaled for 2 points on a portion of the trade. Okay, so going through all of that, right, we obviously ended up with no downside, and had you simply moved your stop to your entry on this second test through, you'd have been stopped and been fine. That was the day for the most part. This just simply wasn't a valid entry because of the lack of rotation. I don't try to guess, for the most part, I do not try to guess which way the market is going to go out of the gate, up or down. Additionally, let's go look at NQ really quick. Hold on 1 second here. Okay, so we're looking at NQ at the same time, and so the first key that I want to note, this was the weekly low right here on NASDAQ, and we obviously got back above it very quickly. We're unable to penetrate back below. We did reject off of the backside test of Wednesday's low, but we were unable to get back below Wednesday's low or Globex low. That was the key for NQ, and then we had this grind. Okay, so yes, the market grind all the way back up. As a matter of fact, in a bizarre fashion, and even after hours, we traded all the way back up. In the last 15 minutes, we closed at 1470, but I believe we traded all the way up to 1478 actually on the close in these last 15 minutes, last hour of the day. We traded all the way up here. It was truly bizarre. It was just weird. That's all I can say. So going back to the trade action, okay, 2 things. First of all, I cautioned when I saw the trade action go back to summertime action. This is quick action right here. See how quickly the bars are moving? Nice wide ranges. All of a sudden we get stuck after 9:30 a.m. with really tight ranges. The first thing I called out was do less, take less action. When the market snaps back quickly, back and forth here, and conversely, when it snaps back and forth in ES, as it did here, we come into the zone, we snap off, we come to the zone above, we snap down. This is normal every other month except July and August type of trading. We get rotations in the first time into the zone, it came down, rejected back up. First time into the zone above, rejected back down, carried on, consolidated in this case because it's summertime for a lifetime, then it moved up to the next point. You notice there was no zone here. The high at the close of the 4:15/5:15 Eastern time close, we traded up into this area, okay, and that was actually the high. The high on even in Globex has been 99.50. Okay, so having a specific trade location, first of all, for a target is very helpful. Secondly, if you're going to take a short or where to take a short, this would have been the prime location. And as it turned out, it was the high. We've since rotated off to 97 in the Globex session, and we'll see. My guess is that we trade above this and up into this 2008 or higher tomorrow. Okay, so the message that I want to leave you with at the end is this. It's almost impossible to trade every kind of market effectively. Okay, I tend to trade fast-moving, wide-ranging, volatile markets extremely well. I tend to be good at it. I make a lot of money doing it. There's another side to the discipline. Everyone talks about wanting to be a great trader and wanting to get rich as a trader, and I want to address that for a second. If you can't identify which markets you trade best, right? You can't copy another trader and trade like he does perfectly because you will always be dissatisfied. And what I mean by that is this. If you felt this open gap, I'm usually a very strong buyer at open gaps with any kind of decent rotation, meaning at least 5 points in, I'm usually willing to buy an open gap. But when we open just above it, the risk of a flush straight through is very high. And then my next trade location, if I was unable to get short up here, was to get a long into this 1983.50 was my first trade location back to the upside. Obviously, that never materialized. Okay, I want to make a really important point here. Some people trade really slow, grinding markets really well. Okay, some people trade really fast markets really well. They come in and out relatively quickly. They can get their scales off, and the speed of the market doesn't bother them. The traders that tend to fail at trading are the ones who don't know which market they're good at. Or what other traders will try to do is they will try to trade both markets just as effectively. And I used to try to do that myself, and what I found out was I just wasn't very good at it. What was easier for me to do and much more effective was simply to identify which market I was good at and then focus on that market. And then when it was slow, to simply sidestep that. So there's a couple things that I've done that have really helped me this month in doing that, and I'm going to wrap it up after this. Okay, number one, almost every day for the last 2 weeks I've refused to take shorts. Today was the first day, and it was because we did gap out of balance. I'm willing to take that shot 10 times out of 10 because if you catch it right, the upside risk is relatively mitigated or muted, and secondly, if you get it right, the rewards are enormous to the downside. So I have no problem with taking that shot. The market won't be going up forever, and I don't pretend to know where the market's going to go at the end of the day. I simply know probabilities. I don't know, and I know probabilities and I know trade location, but I don't know what the market's going to actually do. Okay, and to assume that you do or should know sets you up for failure. The next part of that, as soon as I recognized that we were in a slow, choppy market, I stopped putting trades on immediately. I put the brake on. I had a trade plan. I said I was going to try to get the swing to the downside. I had decent trade location for most of the day, and I had a stop, and I had taken a scale. I had done all those things that reduce anxiety in a trader, that reduce uncertainty, right, and reduce the predictability. Now, if you're not doing some things to reduce all those facts, if you're a trader who's dealing with anxiety, if you're a trader who doesn't recognize which market you trade well in and which ones you don't, okay, it's going to become very, very hard for you to get consistent day in, day out. And that's why I push very hard, number one, predetermine your entries and your exits. I called this short pretty much before the open. I said I would be shorting here for a attempted trade to the downside. I got my location. I set up the trade and the parameters, and I followed those rules. There was not a lot for me to get upset about or to sweat. The slow grind did not threaten me because I'd already gotten my scale off. I was good. Number 2 point, that's very important. I was willing to take the gap, but only with a rotation down into it. That never occurred, right? Number 3, had I freaked out, given I ended up covering at 96 anyways, but had I freaked out, look how many hours I bought time with this trade to possibly roll over to the downside. Given it didn't, and that's fine, okay? But I actually bought time without having to sweat the outcome because I was able to get the scale. I was able to if I wanted to, move the stops down to break even, and I was afforded the luxury of time, which is a big deal in trading with relatively little risk, right? So I know my parameters, and I would encourage you to, number one, have a written trade plan, know your markets, take pictures of these things, identify them very quickly, and take advantage of them when you see them. And number 3, it's August. Okay, and this is the last piece I'm going to come up with because I'm 20 minutes into this thing and I didn't mean to go this long. So this is what I'm going to show you here. Let's go to the chart. Okay, and then let's just use a 60-minute chart. and compact this up. Okay, if you look in this chart, we're in August right now, there's almost no range. Notice how relatively how wide the range is in here and how tight it's almost gotten line thin in here and totally sideways. Okay, trying to trade this is hard. Trying to trade this, trying to trade this, trying to trade this is very profitable. This becomes very difficult. This is very profitable. Notice that when we are back into August of last year, let me see if I can move this very slowly. This is August of last year. Notice how compact and tied up it got, right? Then notice halfway into, this is the end of August, we actually got a little bit of downside move. All of a sudden, into September, we have these wide ranges kick out. These are little 4 and 5 point ranges intraday in early August. Even on the gap downs, we really didn't get that big an expansion. We had a few days that were punctuated, but it was very, very slow. Even into the first week of September, right? That's September 11th. You see how tight and narrow it was. Then all of a sudden, it exploded. Everyone who is making money in these little 1 and 2 point ranges tends to get destroyed in these ranges here. They have a very difficult time. Okay, I want to go back and show you again so that you understand that the pattern, this is not a one-time occurrence. This is a year in, year out deal. Notice again, this August was actually quite volatile last year, but then notice coming into it, look how wide the range is, look how tight it gets for all of August into early September, and then we explode again on the range. This is coming. I'm going to show you one more year. That was back to 12. Let's go to 11. Here's August 8th. This particular year was fantastic. All of August, as you can see, we nosedived in here. And let's go see the year before. Boy, it would be nice to have that again, would it not? And then one last piece. Here we are, back in August. Look how tight it gets. All of a sudden, September's ranges start to expand. This is a very hard, obviously, drive up coming through this year. But notice the rotation's down. This is a 60-minute chart, right? See how tiny and little it got here? And then look at the explosion in the range. Up and down, became extremely nice. So I know that the range expansion is coming. We just got to wait patiently on it. And then all we have to do is sit and wait to get paid. So I would encourage you with all my heart, right? Don't burn up your accounts trying to trade tiny little ranges, right? Quickly identify what type of market we're in, whether we're in a balance day or we're in a range extension day. Use your trading journals. Have a written trading plan, right? Know whether you actually have an edge or not, okay? And stop trading emotionally. And as Mark Douglas points out, who's one of the best trading coaches ever, pre-plan your entry, your exits, and your stops so you can reduce your anxiety and you can start watching the market for clues and actually listening to what the market's saying instead of demanding something from the market. It's counterintuitive, but it makes money. Anyways, my name is Simon. I hope this helps. I will be stepping up the trade reviews. I hope everyone has a great night, and we will talk soon. Have a good night, guys. Oh, and by the way, for the live market preview, guys, 2 notes. Number 1, I will be out tomorrow to have to take my wife to the hospital for a procedure. And number 2, I've already posted the charts this evening for tomorrow. I will get up early, a couple hours here, and do a live market preview recorded and post that link in the private Twitter feed. And anyone who would like to try the live market preview for 7 days, simply send me an email to tradeandperform@gmail.com, and I am more than happy to help you all out. Have a great night, guys. Hope you're all trading well.